Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com looks at the major markets. The Dow's second major drop in 2 weeks, gold, silver, and crude. Trends Journal publisher Gerald Celente examines trade wars, Hong Kong democracy versus communist China, and the general shape of the world's economy. Market historian Bob Hoye tells us no matter what the U.S. Fed does or what policymakers do, if a market downturn and recession is on the way, there's nothing they can do to stop it. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Pleasure to be with you, Jim.
Ross, as we were saying just before we opened the microphone, it seems a whole lot like last week, except maybe the damage to the Dow was a little bit less.
Yeah, but, the damage just goes on and on. The chattering, 2 weeks ago we had that really hard sell-off and started to bounce back, and this thrashing back and forth, it's Groundhog Day almost every day now. Either Trump is saying something about Powell, or it's regarding trade, U.S. And Chinese talks. Just it's the Twitter accounts that are moving the markets around. But overall, you've got slowing growth. If you look at year over year, you got low inflation, and this is the type of environment where the alternative investments, the treasuries, the utilities, the REITs, the gold market, that's where the money is slowly, methodically moving towards. I was looking at the Russell 2000 close off the week at back at the levels that it was at January when we started off that really bad December low. So the internals have been looking weak. At the most, we thought there might be this thrashing around might carry us into the early part of September. But I think the greatest danger, regardless of what the day-to-day action might be here on a bit of a piece of positive news, the fact is that this is a rolling top up here, and support, we're down 6% off the high in the broad indices. Probably get your best support when we're down 10 or 12%.
Gold and silver, are they shinier than ever?
Closed off the week really good. This was, we've been having rallies and pauses and then rallies, and we have new high close on gold, for this move at 1538. Silver's, done well as well. They both, during the week, came close to testing support levels. We're looking at the 20-day moving average on both of those. So that's just round numbers, $1,500 on gold, $1,685 on silver, and we've got big commitments as far as the spec are concerned, speculators. The relative strength index, as far as the commercials and the speculators, are at extremes. They have been now for 3 weeks. So for all that the trends are in motion here, one has to be extremely cautious, because first week with a lower low or a close below the 20-day moving averages, and I think you could see some pretty hard corrections, all within the context of longer-term bull markets. But don't be surprised if there's a decent correction just around the corner.
Crude oil, is it holding up?
Surprisingly so, although into the end of the week we got down into the 53 and change level. There's you've got Saudi Arabia doing what they can to try and stabilize pricing levels, but we're past the stage now for the better part of a summer rally that would be related to the driving season. And you're probably going to see some inventory problems as we move into September, October. So don't be at all surprised if there's a break below $50.
Ross, thank you so much for chatting with us.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Gerald Celente next on This Week in Money.
Always consult your investment professional before making any investment decision.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente. He's the publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Always great being on with you.
Gerald, of course, you're one of the best in the world in seeing economic warning signals. What are you seeing?
Well, we're seeing the greatest depression. This is going to be worse than the Great Depression of the 1930s. And history is repeating itself. And the way it's repeating itself, go back to the 1930s. You had trade wars, currency wars, Great Depression, World War. Here we are in 2019, trade war, currency wars, and the greatest depression is heating up, and the way things are going, when you look what's going on with India and Pakistan, India having taken the Kashmir, ripping up the agreement that was signed in 1947, both nuclear armed, and all the other destabilization going on around the world. If something doesn't happen to the very positive levels of human species, we're going to be ending up in World War III, which will be truly the war that ends all wars, because it'll end most life on Earth.
What are you hearing about China and Hong Kong?
That's one of the black swan events, by the way. There are two of them. The one I mentioned with India just all of a sudden, taking Kashmir, and this one going on in Hong Kong. Hong Kong has, about 7.4 million people, and last Sunday it was reported that 1.4 million took to the streets, and it was raining, so they all had umbrellas. Can you imagine that happening in the States? No way, no how. So it's really important because Hong Kong is the Western bank's gateway to the Asian markets. And if that thing goes down, there's going to be a lot of problems with not only the banking system, but it's also going to really hurt the Hong Kong economy, of course, but also China's. And China's not going to tolerate this. Again, it's 7.4 million people against what? 1.4 billion? So who wins, in terms of taking over the place? And that's what we see happening. So this is one of those black swan events that is leading up to the greatest depression. And if it gets out of hand as it's getting now, we can see some very, very troubling results happening.
So you believe the Chinese tanks will roll in, and if they do, will they stay?
Oh, yeah. Yeah, they'll take it over. And again, the deal was that I believe it was 1997, they would have 40 years of being place where they could make their own laws, but they would be under the really rule of China, but they'd have their independence in some ways, kind of like what happened in Kashmir, actually. It was the same kind of thing. They had their independence, but they were part of something bigger, and that's what's going on with Hong Kong, but just in a different way. So, the Chinese will just take the place over.
Is that a case of China killing the goose that lays the golden eggs if they did that?
In some ways it will be. But China has real problems. They have a $40 trillion debt problem. Their economy's slowing down. They're doing everything they can to pump it up, as they just did this week by changing their new loan prime rates. And they just debuted this whole new thing that they're doing. So they're trying to make it cheaper to borrow, like every place else around the world. Name the country. What is it, 30 nations in 2019 have lowered interest rates? And now you're looking again, the Reserve Bank of Australia, they're going to be lowering them again, it looks like, and they're already at historic lows. So the People's Bank of China, just debuted its new loan prime rates, LPRs, and they're trying to do what they can. This is really nothing more than just a rate cut.
President Trump says China is in real trouble because of his tariffs. Is that the reason?
No, not at all. They've overbuilt. According to the data that's available, and I would like to see others to say it's not true, China's GDP was affected by 0.6% as a result of the tariffs. So that's nothing. And the Chinese economy is going down because it's overexpanded. Again, $40 trillion worth of debt, to GDP ratio of 300. Has nothing to do with trade wars. India's going down. Has nothing to do with trade wars. Pakistan's in terrible trouble. Has nothing to do with trade wars. Zimbabwe, South Africa, Argentina. Yeah, trade wars? No. It's screwed up economies.
Yeah, don't cry for me, Argentina. Maybe we should cry for them.
Oh, they're in real trouble. And again, they also got, the International Mafia Federation hit them with a $56 billion loan. And of course, you know what that means. We're going to have austerity measures, which means we're going to take every penny that you have, any way we could get it. We're going to raise, we're going to cut your benefits. We're going to do away with your pensions. We're going to increase your retirement age till after you die. We want our money. So again, one country after another. Look what's going on in Venezuela, Brazil, Germany. How about Germany? I mean, here you're looking now. You're hearing the Bundesbank saying they're going to go into a recession.
What's the cause of this? Big debts?
Big debt, and it was a fake recovery. All it was monetary methadone pumped into the system to enrich the bigs. End of story. Period. Paragraph. That's why you have all these populist movements going on. The multinationals and globalization gained and everybody else went down.
Do U.S. stock markets look like they're in a correction or the beginning of a bear market?
To us, it's the beginning of a bear market. And they may go up a little more, but Trump is going to push the Fed to lower interest rates more. They'll probably lower them at least another percentage point, probably more before the election in 2020. And so that'll artificially juice them, but there's nothing there to prop them up the way they were going before, because let's remember he did a tax deal that pumped in a lot of money back in 2018. In fact, according to the Tax Policy Center, 82% of the benefits went to the 1%. So that artificially propped up the markets as well.
Mm-hmm. Is that going to harm him at election time, that most people didn't get much of a benefit?
Most people don't know that. And, it's a presidential reality show. Facts count very little. It's who puts on the best act.
Are gold and silver now in bull markets?
Oh, sure. We see, particularly gold. We made the forecast, as you well know, on June 6th. It was the headline was the gold bull run, and the gold bull is running. I've been on your show a lot of years, and I've been saying the same thing for about the last 6. Gold has to break over $1,450 an ounce, and once it does that, stabilizes above that, the next shot's toward 2,000, and that's what we see, and that's what's already happened. It has well stabilized above the $1,450 an ounce mark. And the downside risk we see is very small. We see it maybe at around 1,400 at the very worst. As a trend forecaster, we don't give financial advice.
We'll have more with Gerald Celente right after the break.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Gerald Celente. Gerald, is the U.S. dollar likely to get stronger?
The dollar is strong because the other currencies are also weak. I mean, look what's going on. I mean, negative bond yields all over the world. I mean, what do you have in Switzerland? You have a interest rate that's minus 0.75. The European Union, they're going to be lowering interest rates to minus 0.5 from minus 0.4. They're going to pump in another $56 billion a month in quantitative easing, according to the latest reports. And it's all over the world. Everybody's pumping in more dough. So the dollar's getting stronger because the other ones are getting weaker. And it's not true. We don't believe it's true that China is devaluing their currency, because there is some $3.5 trillion worth of business debt in China that's dollar-based. The last thing they want to do is see their yuan weaken, so it costs them more to service the debt. And same thing true with emerging markets. And so the dollar's staying strong because the other ones are so weak, not because things are so great here.
Is the big loser in the race to lower interest rates pension plans?
Pension plans and people. I mean, there's no such thing as savings accounts anymore. And that's why they did this, to boost the equity markets. So you gamble in the equity markets. And again, with negative rates and zero interest rates and negative bond yields, that's the other reason why gold is going up. Why would anybody buy a 10, 20, 30-year bond knowing that you're going to get less back than what you paid for it when the time runs out? So people are looking for a safe haven asset, and gold's it.
Is the push by President Trump for lower interest rates being done to avoid or delay a recession?
Absolutely. He wants to get reelected. And he's in the real estate business. He knows that the higher interest rates go, the softer sales go in real estate. And so and that's why he's been going nonstop on the Fed to lower interest rates. He knows what has to happen. You need more monetary methadone to get the addicted bull, keep it running before it ODs.
Are battery-powered electric vehicles the transportation of the future?
We don't see it in the way the battery is now. The battery now is basically an 1800s invention. It needs to evolve far beyond where it is now. Using the current technology, we don't see it taking a very big market share. And I believe globally you're only looking now about 2%, 3% tops. So the technology has to change. And we have the wherewithal to change the technology, but the money's being wasted by putting it into, developing more sophisticated military weapons and wasting the money on that, as President Dwight D. Eisenhower warned in his farewell address, that the military-industrial complex is robbing the nation of the genius of the scientists. So we should have a very, very different way of generating power, whether it's in electric cars or electricity for the home, whatever it might be. We need a new system.
We'll have more with Gerald Celente when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Gerald Celente. Gerald, who do you see as the current Democrat frontrunner?
Elizabeth Warren so far. We don't think Biden's going to make it when near the end, but he may. It's very hard to tell. Right now, if we were to pick the winner of the presidential reality show in 2020, it would still be Trump.
Why is that?
It's too. They don't have enough power behind them, and their focus is too spread. And Warren doesn't have the personality. She kind of she reminds you of your 10th grade English teacher, or maybe the librarian. So she doesn't have that zest. And Trump knows how to play it. He's the apprentice champion. He is the presidential reality show champion, and he knows what to do. And there's going to be some big surprises coming before the election. One of them, we're forecasting there's going to be peace in Afghanistan and North Korea. So he's going to use these things to his benefit. And, again, with the interest rates going lower, the economy is going to go higher.
What will be the main points that achieve peace for North Korea and Afghanistan?
Oh, in Afghanistan, pulling out the troops. And North Korea pulling the troops out of South Korea. And, South Korea wants to use North Korea for cheap labor. There's no hidden agenda there. That's right out in the open. And the United States and other countries want to sell more into that, so to develop it. So that kind of thing. They'll make some deals that, we'll give you peace, sign the agreement, but you have to let American companies do this, that, and the other thing over in North Korea. So it'll be, it's about business. It's about the bottom line.
President Trump has said North Korea has some tremendous natural resources that they haven't touched, and he also says they have great beaches that he'd like to build hotels on.
There you go. Need I say any more?
Is President Trump likely to succeed in putting an end to globalism?
Oh, no. No, globalism, that's the way of the destruction of the mom and pop businesses, the entrepreneurs. The globalists have taken over. Look what's going on. Home Depot, Lowe's. Remember when there used to be a thing called hardware stores and individuals owned them? They were everywhere, in every town, and in every town. And things called stationary stores. And now Staples and Office Depot, they're in charge. So no, globalism, the multinationals have taken over.
Are geopolitical tensions rising, and specifically where?
Oh, again, I mentioned what's going on in India and Pakistan. That's a big one. The other one that you mentioned, Hong Kong and China. Take a trip to Algeria. How about Venezuela? Oh, it's happy days in Argentina. Why don't we go to Zimbabwe? Maybe we could vacation there. No, maybe South Africa's a lot happier. It's one country after another. Yemen, look at Yemen. That's not even talked about. The worst humanitarian crisis on earth, and it barely makes the news. Then there's Syria, wonderful times in Libya. You go around the world, you could see the tensions building, and now even recently in Italy. And it looks like they're disbanding the government. The Prime Minister quit, Conte. And so there's going to be more problems there as well. As the economies fail, when all else fails, they take you to war. That's the other issue. And when this greatest depression hits, when people lose everything and have nothing left to lose, they lose it. You're going to see some really ugly times. People forget that the 1930s, there were massive demonstrations and strikes and real battle between the people and the police and the established government. And that's forgotten. You're going to see that magnified many times this time around.
In the 30s, they took away people's gold to help finance the government. Could that happen again?
Absolutely. They'll do anything they can to steal, rob, and cheat. They're the mobsters. People call them in our country Democrats and Republicans. I call them, murderers and thieves. By their deeds you shall know them. How much too big to fail? Bailouts? Who made that stuff up? Too big to fail is anathema to capitalism. And look at the wars. that Saddam Hussein has weapons of mass destruction and ties to Al-Qaeda. I tell you, Jim. I don't have any proof, but believe my BS and will slaughter over 1 million people and destroy the country. What makes those sick young men from Dayton going into a place where his sister's in and hating the people in there, or a sick guy going into a place in El Paso where there were Mexicans? What makes them any different? I hate those Mexicans. I can't stand them. I'm going to kill them. What makes them any different than a Bush or a Barack Obama? I don't like that guy Gaddafi. I want him out of there. I don't care who you kill. I don't care how much of the country you destroy. I want him out of there. What makes them any different than the Bush with Saddam Hussein? Or Obama with Assad and the other criminals that, I want them out of there. I don't care who you kill. So what? 500, 600,000 people are dead and we destroy the country. What makes them any different than the sick people that kill other people because they don't like them?
Is there increasing political risk in investing?
Well, the political risk that you talked about, with gold, they're going to do everything they can to confiscate it, I believe. The central banks have bought up more gold in 2018 than they have in 50 years. So the political risk is always risks. And as far as the equity markets go, that's not my forte in investing in stocks. But I firmly believe that I was the first to call the Trump rally 2 weeks after he got elected in 2016. So it's not like I'm a gloom and doomer. I just look at the facts. And now they're running out of the facts, so they're going to boost the markets up, and politics is going to have a lot to do with it.
What's the latest in health news?
Well, the latest in health news is the obesity epidemic. And what people are... We're not ready for this to happen at all. The aging baby boom population, the elder crisis around the globe, all the baby boomers boomed after World War II. People had better things to do than go fight. Let's make love, not war. So now the baby boomers, the leading edge is 73 years old. And they're terribly out of shape. You're looking at 70% of adults are overweight, 40% obese. And plus all the people that are on these antidepressants. So when I talk about the Greatest Depression, by the way, this is globalnomic. It's bigger than just economic. And again, you look at that crazy kid that killed those people in Dayton, Ohio. He was on antidepressants. So when the health issues or the mental health and physical health of the people is deteriorating very rapidly, and there's going to be big business in reversing that as well. Some of the cures and work to be done to change it will be positive, and others will be fraudulent.
What's your latest globalnomic view?
The globalnomic view is the Greatest Depression. As I said, this is going to be more than just economic, and that's what people are missing. People feel it in their pocketbook, and they feel it in their bones. They know how bad it is. So what's going to happen when the slowdown happens? You're already seeing what's going on. U.S. Steel just announced, massive layoffs. You saw the banks 2 weeks ago announcing 30,000 job cuts since April. So people are not going to have their jobs. They're going to lose their businesses. And they're going to lose their homes. And the depression is going to be, as I said, much bigger than economic. It's going to be felt very deep inside. So this is a time, as I see it, for people to get in the best shape they can, physically, emotionally, and spiritually. And I don't mean religiously. Your own religion's fine, but spiritually in a sense to elevating to higher levels in everything that you're doing. I just went through some difficult times and on a personal level, everybody happens to, putting trust in somebody you can't put trust into. And rather than it bringing me down as it was, because emotionally, I got in the best physical health I could get into. So I increased my workouts, improved what I was eating, and got in much, much better shape so I could weather the storm. So those are things for people to consider. You need to be in the best shape you can to not go down when the Greatest Depression hits.
What's the latest for Occupy Peace?
Well, not much. It's very difficult to raise money, and So we're kind of on hold. We don't have a lot of support behind us. And
Gerald?
of course, anybody that wants to help us, they could go to OccupyPeace.com. It's the only peace program that I know of with an action plan. Bring home the troops, secure the homeland, put them to work to rebuild our third world infrastructure, force Congress to vote to go to war, which they have not done since World War II, and have a referendum on each state ballot that when we're ready to go to war, the people will vote. These people, these politicians forgot two words, public servant. You do what we tell you to do, because we're the ones that pay for the war with our money and our lives. So anybody that wants to help us push Occupy Peace forward, we need all the help we can get.
How can people find out more about the Trends Journal?
Oh, simple. Just go to trendsjournal.com, trendsjournal.com. You know, Jim, when you turn on the news, all they do is they tell you what happened. With the Trends Journal, we tell you what's going to happen. They give you yesterday's news today. We give you tomorrow's news today. It's the only magazine in the world, guaranteed money back, where you will read history before it happens. trendsjournal.com.
Gerald, thank you so much for being on This Week in Money.
Oh, and thank you for all This Week in Money does.
My guest has been Gerald Celente, publisher of the trendsjournal.com. He was speaking to us from historic Kingston, New York. Coming up, market historian Bob Hoye next on This Week in Money.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah.
Bob, with all this talk of recession and so on, people are demanding the Fed cut rates to prevent one. Can anything the Fed does prevent a recession if one's due?
Well, that's certainly the theme. I've got lots of headlines here about the Fed cut will keep the good times going, but it's not the case. We've been beating this one to death, Jim, because the 3-month Treasury bill yield in the U.S. went up until March. And then it turned down. And then when it broke down in April, that then was signaling that the boom was probably over. And then we'd noticed that the Fed was usually about 5 or 6 months behind such a change in interest rates. And here we are. But they just, there's a myth. And I've got the data for a couple hundred years that shows that at the start of a financial bubble, the short-dated rates will turn up, market rates, and then about 5 or 6 months later, the senior central bank will increase its discount rate. And then when you get to the top, it's the reverse, where then the market rate of interest turns down, like the T-bill in March, April. And then, but then here is one of the most dreadful errors made in calling markets, is then to look at the first Fed cut and say that this is going to restore the boom. And you've got all these examples going back for a couple of hundred years where that is not the case. So here we are. Now, today's drop. I think at one point the Dow was off 400, and that's due to a news item about Trump and with trade with China. But in a bull market, it wouldn't go down as far, and that's one of the things was in a bull market, bad news doesn't matter, because that was the old saying that every bull market climbs a wall of worry. And of course, the one that I like to add, and then in a moment of great enthusiasm, vaults over the wall, only to find Murphy waiting and You know how Murphy will always provide something bad, Murphy's Law. So here we are. You have a sharp down day with news, but it shows that the market is vulnerable. And again, I'm going to emphasize the irony on this, Jim, is that all of the noise about the Fed cut was needed to give the final surge to the whole bull market. So I love the irony on it. So here we have, there are other things going on. We call them the friends of the rally, and that would be improving industrial commodity prices like base metals and crude oil. And also with that would be the yield curve being constructive for the market, which it has been until it got too much. And then also credit spreads being positive for the market. So these were likely to be friendly into the second quarter, and they were. And then after mid-year, and well, that was the sunshine part, we called it, Jim. Yeah, the sunshine market. And then in August, this would likely turn to twilight. Hey, it is. And then after August, it could be another sell-off down into dismal December. This now is seeming more probable because when I mentioned the credit spreads, which of course is the difference between high-grade bonds and low-grade bonds, they reverse in plenty of time to give a warning towards the top. And the first breakout to reversing the trend to widening was a few months ago. And then now, a few weeks ago, you had the second breakout, and that's the one that can be devastating. And it is working. So this was matching up pretty well with what we had in the summer of 2007. And the only difference here is the two moves are only about 4 weeks difference from in 2007. So there is a path here being plotted. And it's not a pleasant place that the path leads to. But there's nothing the Fed can do about it. There's nothing policymakers can do about it, like saying, oh, we're going to suddenly increase the expenditures by government. No, they're at the limit now. So unfortunately, I think we're looking at a heavy-duty market in the fall. And today's hit, you may end up with a rebound into next week or something like that. But it's a warning. Shows that the market is really not that robust.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Bob Hoye. Bob, people keep telling us that an inverted yield curve is the precursor to a recession. Has there ever been a time where if your 10-year rate is paying less than your 2-year or lesser rates didn't pan out into a recession 7 or 8 or 9 months later?
Oh, no, it's pretty reliable. It's just that it's not exactly precise. Now, the thing is, the flattening curve, like heading to inversion, is a warning, but it's not something you could trade off of it, and then it will reverse to steepening, which will confirm that you're in a contraction. But as I say, it's not something you can trade off of. It's just something to be aware of. The better one to trade off of, of course, is the credit spreads, which here I've got it in front of me now. In 2007, the first breakout to widening was accomplished in late June of 2007, and the dreaded second breakout that was in early July. So this time, the first breakout was in late May, and then the second breakout was early in August, so that was only a few weeks ago. But even then, that still gave traders a number of weeks to lighten up. So then another one I saw here too was the U.S. manufacturers PMI, and it was announced just a couple of days ago that it broke below 50. Now that's an arbitrary level, but it's important because the last time it broke below 50 was in May of 2007. So this is, the spreads is a financial item. This manufacturer's PMI is an economic item. So the two are, well, heading south. So you have to be realistic in a market like this and not get comfortable with hope. Too many people out there be hoping that the Fed cuts will work or hoping that something comes along. But one just has to be disciplined and look at the excesses that have been accomplished and the timing of those excesses, and more particularly the changes in weakening industrial commodities and the widening of credit spreads. This is the real world. And so our advice to all investors is to get real and get yourself protected. There's nothing to it. But in getting protected, the urge is to go straight to cash or treasury bills. But the yield in treasury bills is likely to go down to zero again. So our advice is to look for some 3 to 4 year good grade corporate bonds in the U.S., and you'll get a better return than from treasury bills. And there's not a huge amount of risk due to credit, and not a huge amount of risk due to the price change against you, because if you're just 3 to 4 years out, you can just hold on right through. So that's one place to be. Another, of course, is to always have a little gold as kind of portfolio insurance. But gold's a little overbought, and gold shares got quite overbought. It's been a very good run from November when we had the buy. So, but out of these pressures in the fall, this will be setting up a good opportunity to buy gold stocks again. And I'm quite sure that with our technical work, we'll be able to catch a low. You can never get the bottom trade, but you can have the comfort of buying at about the appropriate time, because as we noted last year was the time to avoid gold stocks. We were talking about that in the summer because they could get hit by a problem in the fall, which they did do. So once the pressure started last fall, we knew that they could run till as late as end of the year, which they did. But then our work on the gold sector specifically, on November 1st, we concluded that it was time to accumulate the gold stocks. And then the next low was in the middle of November, and then you had a pretty terrific rally. And in July, we were noticing that the sector was becoming really quite overbought, and the advice was to kind of take some money off the table because of a potential problem in the fall. So, and it looks like some of the day. So it's going to be very tough out there, and it's time for all investors and traders to look at reality and get out of hope and get out of some of the stocks and raise some liquidity.
Bob, do people forget very recent lessons in history, such as allowing mortgages to go to people who probably shouldn't get one in the first place, like they did in the States back in 2007?
Yeah, this is fascinating, Jim, because in the housing boom in the States in 2006, that was its best, I guess. The whole lending industry was more or less pushing money out the door, urging people to buy houses, and they were putting valuations on a house that was way above market, such that it would justify the size of the mortgage. And the whole game was based upon that the price advance would eventually cover the fact that you couldn't afford the mortgage payments. And then, of course, that then failed. So this is what there was then. They came in and the whole system, because it was losing money, tightened itself up and got put in rules and regulations and no more scary mortgages. And but then in a party like this, it's the same thing. Everybody wants to do this kind of business and expand their business, and there they go, lending mortgages to people who can't afford them. And it's again the same thing. But this is an interesting subject, Jim, because and with the 1929 crash and the severity of the contraction, policymakers and bankers and some politicians understood what was going on then, and that the contraction was due to the boom. So then they said, we will then protect the banks from themselves. They came in with the Glass-Steagall Act, I think that was 1933, that then removed ordinary banks from playing in Wall Street. And then we get into this latest new financial era where anything can happen. In 1999, they more or less, the banks were all playing in Wall Street, so they bypassed the Glass-Steagall Act, and then they just took it off the books. So this even goes back even further, where in the South Sea Bubble of 1720, which was the first one, and the financial action was basically in London and Paris. But when it crashed, Parliament passed a bill preventing what I think they might even call it infamous stock jobbing. So then you couldn't have another dangerous bubble. And then, of course, in 1772, some 50-plus years later, it was time for another great financial bubble, and there was. So that Anti-Bubble Act was taken off the books. So this behavior of now, more recently, lending mortgages to people who can't afford them after they were prevented, it's not new. It's the way financial history works. So, which is always a fascinating study. Gosh, I've been doing it since the 1970s, and there's always something new to learn, or always something, a historical item that comes out. And this is, of course, why I stay in the business. It's just so fascinating. And the one then enjoys writing about it. Now, how can you enjoy writing about a potential serious contraction? Yeah, because this is the way the world works. So we'll see how things go over the next few weeks, Jim.
Perhaps people in the U.S. banking industry have forgotten that old saying, those who forget history are doomed to repeat it.
Oh, yes. That's a good line. It's always a good line.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, Bob Hoye, and thank you for listening. If you have any questions for our guests or for the show, you can send them to info@howestreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Ray, CEO and President of American Manganese. Welcome back to the show, Larry.
Jim, it's always great talking with you.
Larry, what's the latest down there?
Well, we were hoping to have a press release this week, but certainly next week, and on the progress that we're making. But in regards to that, there was a conference in Vancouver, a 3-day conference, and which resulted in 30 or 40 people making a tour, metallurgists making a tour of Kemetco's labs. So Zarko and I went down there, and that started at 8:30 yesterday, and we had groups of of a half a dozen come by several times, different groups, of course. And they're very interested in what we were doing. They were able to see us precipitating the NCA, the nickel, cobalt, aluminum that we've been treating. We've already treated the MMC, and they could see it develop in a large flask that holds about maybe 60 gallons. And then we, precipitated powder out of that. And so we had a lot of powder on display, so they were very impressed with that. And we enjoyed talking to them. Zarko gave them a good description of what we were doing. And, we've answered their questions. And after the tour ended, we had a meeting with an international recycler who came by, and that lasted for a couple of hours, and it was a good meeting. It shows that the actual recyclers are interested in what we're doing, and they must know that their current solution of burning the batteries is just a stopgap solution, and they need a solution from cradle to grave, and that's something that have developed, I should say. So it was a good week, especially yesterday being the highlight of the week, and we're working on a few other things. I think I mentioned we had a group come up from Washington State that videoed everything we had, and they're working on a story. So we'll be updating you on that at some time in the future. And but the big story today, of course, that everybody's looking at is the Dow. The last I looked was down 500. Gold was up $30. The base metals were all down. And it's another volatile day in the market. I don't expect that rationalization will probably result in a smoothing out of the market sometime in the future. But, the tariffs that China was dumping on us certainly hurts. It hurts them, it hurts everybody. But I think the end goal is in sight, and, we'll get back to business as usual. One thing that must concern the lithium miners is that they've got nothing but bad and depressing news out there. That is something that the Chinese have really cornered and overproduced, and now you've got all kinds of mines coming into production, especially in Australia. And I noticed today that one of the big Chinese groups canceled a offtake agreement with an Australian producer. So those are signs, but that isn't going to last forever. But I said several months ago that lithium would have a problem getting up, because I've followed these markets that are influenced by China for, over a decade, and you can always begin to see, what's developing on the horizon, and you have to prepare for that. I think we're in great shape. We've got a solution for end-of-life batteries that will be required. Commodity prices don't affect the bottom line on what we're doing that much. As long as there's enough items in there, our cost of getting it out is super cheap. And so I think we're in good shape for everything that's going on, Jim, and I think the shareholders can be comfortable with that.
Larry, for people new to American Manganese, what are you guys all about?
American Manganese is a critical metal company that got involved in technologies with their manganese property in Arizona back in 2009, and we patented a process that would allow us to compete utilizing extremely low grades, 2 to 3% manganese compared to 40 to 50% manganese or 30 to 50% manganese in the rest of the world, for making electrolytic manganese metal and electrolytic manganese dioxide, which is used in the lithium-ion batteries. And we actually made batteries back then, so it was a natural evolution for us to move on to adapting that particular patent to processing cathode materials because they had similar chemistries. And we've proven that that's done. We're almost through our pilot plant stage, and we've had tremendous interest from some household names out there that everybody would recognize. So it's something that's developed. We have 2 patents on that, 1 patent on the manganese, and we are patented in 4 countries, applying in 7 others. So that's the gist of the company. We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. You can reach us at the phone number 778-574-4444. You can email me at LREAUGH@AMYMN.com. Our website is AmericanManganeseInc.com, and all our information is on there. You can do a complete, thorough due diligence on us and our project. And our project is developed by a third party, so it's they're arm's length to us. They had no ownership. That's Kemetco. And, so we try to be as transparent as possible.
Larry, thanks a lot for the update.
You're welcome, Jim.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on August 23rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.